Hello and welcome to the latest in our CR Conversation series, live here on LinkedIn. My name is Dan Harrison. I'm MD Asia for Currency Research, and I'm based in Melbourne, Australia. I think we're in for a real treat today, as I'm joined from Singapore by David Mann, Chief Economist, Asia Pacific, Middle East and Africa for Mastercard. For those of you who, like me, are avid consumers of cable news, David might be a familiar face, as he is a regular contributor on many of the reputable cable news channels. So welcome, David.
Thank you. Great to be here.
Yeah, nice to see you. It's we are in this virtual world, and we're looking forward to one day sort of getting back to Singapore, but that might be a few months yet before I can get up there to see you. So in a minute, I'll throw over to you to take us through your assessment on the outlook for a global and regional economy. As we hopefully move now into the recovery phase of the COVID pandemic. And we'll also take a look at the very recent report from the Mastercard Economics Institute called Recovery Insights, Commerce Evolution, which looks at COVID-19's contribution to retail's digital acceleration and how much of the change will actually stick when we get back to in-person experiences. And of course, we'll have some thoughts on traveling again. But first, to kick off, can you tell us a little bit about the Mastercard Economics Institute?
Sure. So it's a group that started about a year ago with an idea of taking a look at what's going on in the global economy through the lens of the consumer, and trying to also focus in on what the big longer term structural changes are in people patterns around the world, and to give insights to our clients and key stakeholders globally, not just say in the US or in the markets in the West, but all over the world, to give insights on what the big changes are. And in particular, most recently, thinking about COVID, how much of the big changes that we've seen are actually going to stick.
It sounds like a great initiative. I've certainly had a look at the reports that's been produced so far, and it's all very insightful. And we'll be looking at one of them a bit further today. Well, I guess there are really no more adjectives to describe 2020. Certainly that I would use in such polite company. But I think it's been an incredible time. We're now all looking forward to what's coming. For sure, some countries are still well into the pandemic. Others are now emerging. Some of us here in Australia have been very, very lucky that we've managed to avoid the worst of it so far. So what do you and your colleagues at the Institute, what are you seeing for the future?
Well, probably the main thing I would say that we're going to see is this recovery that's ongoing, but I would expect it's going to be something where it'll be quite imbalanced as the downturn was, because effectively what we're looking at is what was effectively a global recession, but it was actually a very different one to what we've been used to. It was an incredible dive down, but an also rapid recovery back up. And even in that time, we saw a lot of particular parts of the economy actually doing even better than they had been doing pre-COVID. And of course, a lot of big underlying structural changes on the shift to digital only accelerated during this process. And it's all these sorts of patterns are the sorts of things I think we could all be focused on for the long term, not just on what the recovery looks like. The key thing I would stress on growth, though, this year is that the actual rates themselves are not particularly useful because the base effects are just so extreme. So it actually is masking some of the underlying true nature of growth that we'll see in the coming years. But maybe it's a good time. Shall I share some of the material that I've got to run through for today?
Yeah, that'd be terrific. And everybody who's tuned in, you can, if you've got some questions, you can pop them in the chat channel, and we'll try to get round to them if we have time at the end. But yes, please, David, take us through the material you have.
Brilliant. So I'm just loading up the view now. Let me know when you can see it. Okay. So the beginning point that I would make is when we're thinking through what the global recovery would actually look like, we know that we've seen COVID, of course, playing a massive role in the downturn. The stringency measures that ended up needing to be taken ended up being quite extreme at different times in different markets around the world. And it really compounded this point about just how imbalanced the downturn as well as the recovery will actually be. There are other, of course, important points we should be thinking about, though, not just on COVID, but also on the acceleration and the shift to digital, as well as the amount of pent-up demand that there still is from consumers around the world. And I'll come on to some of those other points a bit later. But before I do, it's impossible to do any sort of outlook without discussing what the views are on COVID. And here we've decided to try and draw a map of the world to give an idea of which parts look like they are, at least based on present trends, likely to be heading towards, quote, herd immunity, at least from the existing strains of COVID-19. And here you can see the United States by late 2021 likely to have herd immunity. It's getting a bit more debatable on which parts of Europe may be able to achieve it with some of the delays that we've been seeing, but the UK certainly looks on track to achieve it by late 2021. The bigger challenge around other parts of the world is when you look at the ones who are likely to come a bit later, when you look at Africa, the Middle East, and indeed around Asia, it does get a little bit more tricky on the exact timing of when we will see it. We know, for example, in the case of Australia, we were penciling in around mid-2022 anyway. Some of the delays from logistics, from some of the setbacks because of the very, very rare occurrences of some health issues related to some of the vaccines are all challenges on being able to give the timings. But this is an important factor that we must bear in mind when thinking through what the recovery may end up actually looking like. But I would stress it's not the only thing that we should really be focusing on. We know, of course, the new cases are coming and the vaccine deployment is a little bit imbalanced so far. It's only certain economies are very far along, others have a long way to go. And at the same time, new strains are coming out, adding to the question marks over the effectiveness of the vaccine rollout. Now, these questions are ones we just can't answer for now, but they are things that we need to be wary of in the future. Secondly, we know that as a result of COVID and people being forced indoors and away from anything that involved being around lots of people, that the shift towards digital in many areas of life, but in particular, including in retail spending, has accelerated. And we believe that trend 1 to 2 or even more years, depending on where we look, is something that is here to stay. But also, let's not forget that the pent-up demand there is from higher income groups who are sitting on some pent-up savings. They've done less travel, certainly a lot less international travel. Of course, domestic tourism has seen signs of life in the places where it's been possible. That extra pent-up excess savings is something that I think is also worth thinking through over the next several months and even into the end of this year in 2022. Now, when we think about where global growth is actually coming from, the interesting story here is that, as I'm showing you, the shares of global GDP growth, for example, in 2021, that China, and this is using projections from the IMF in PPP terms, is around a quarter or more of global GDP growth, a very similar sort of pattern to what it was contributing to global GDP even before COVID started for many years. And then if you were to combine China with the other Asia Pacific contributors here, and let's include, say, India, the ASEAN, Australia, New Zealand, Japan, and then the rest of Asia, actually you get more than 50% of global growth coming from Asia Pacific. And at the same time, we know that the majority of the economies that we believe will be able to break even on where they were at the end of 2019 in their GDPs are starting off with the Asia Pacific region. And of course, front and center on that as a leader has been China. Now, this recovery and growth and this relative strength and importance of the Asia region is, again, nothing particularly new. But interestingly, when we think through the next several years, we expect this sort of pattern to hold, where it's around a quarter of global growth, at least coming from China, a similar amount of growth being contributed by India, as you see, for example, coming from the United States, and then a few others in the Asia Pacific region, also major contributors, even compared to, for example, continental Europe. Now, where did some of this recovery come from? Of course, the good news on rolling out a vaccine as rapidly as has been done in many places is a positive. But the other policy responses have also been playing a major role, particularly in the higher income economies that were in a better position to be able to support growth. And here I'm thinking of places like Australia, New Zealand, comparable to the US in just how much of a contribution they made to extra spending during 2020. So here the orange sections of these bars represent the additional spending and foregone revenue compared to the yellow sections of the bars, which are not as immediately impactful, things like loan guarantees or equity. So places such as Singapore, New Zealand, Australia, US, if we go global, were the ones able, and Japan, able to give some large impetus to their economy to support growth. It was, of course, more difficult to do as much as a share of GDP in the emerging markets that were more fiscally constrained. But I would stress that the fiscal response on top of the monetary policy response has been so strong that that just adds to the upward pressure that there is, in particular on, of course, recovering growth. We're even seeing reports of supply chains going into bottlenecks as a result of the improvements we've seen in demand so far. Labor markets on the whole have been seeing some recoveries around the world. There is, of course, are still challenges in the places that still have some lockdowns that are still underway and some surges in cases. And of course, the challenge right now in India is one we're paying close attention to. But that return of price pressures and inflation pressures, particularly of asset price inflation, whether it's commodities, and you can look across the commodity spectrum now, and they've all been rallying quite strongly from the lows, or if it's in equity markets or property markets, and here we just look at the S&P or the Nikkei, but all of them have seen these very strong rebounds even beyond where they were pre-COVID. And of course, alongside that comes the rise in bond yields, which is something where now we've gone back to approximately where we had been pre-crisis. If we were to go back all the way, for example, with US yields to say 3% rather than around the just below 2%, and we're certainly below that now, that we are now, that would be something that could be more of a concern longer term. We don't believe we're there just yet. So some asset price inflation, broad-based consumer price inflation is picking up, but not to the degree that we believe policymakers will choke off the recovery that's going on. And with that in mind, I think it's worth stressing that when we look at the pent-up demand that there is across even the Asia-Pacific region, where it's not as many places that have this excess amounts of savings compared to many of the advanced economies all around the world. One estimate that was mentioned this week was more than $5 trillion of excess savings in that amount equivalent all over the world that's yet to be spent. We have still been seeing a pickup, as I show on the left here, in the growth of savings as a ratio to or household deposits. And so these savings rates rising, for example, Malaysia, rapid rises. We've seen it across many parts of the Asia Pacific, where we have those improvements going on in just how much extra savings there is to spend, alongside people feeling more confident about the recovery, the wealth effect, combined with knowing that there are vaccines either rolled out or on the way, has been helping those many economies to see a recovery also in the overall spending that we've been so worried about previously. So Australia is a good example of seeing relatively strong retail sales. We've seen it in New Zealand, even in Korea has been picking up. There are some more challenges, and it's not a uniform story across the board just yet. We still need to get a little further along, particularly on the opening up to more international tourism, and to see a pickup in spending coming from more international linkages. But I think before I wrap up and maybe open for a bit more of an open discussion, I think it's worth stressing one final point from our surveys that we've been running, which is we know from what we've been seeing, the surge in the use of digital commerce, of e-commerce, that has been clear around the world, particularly in the places that suffered the most from shutdowns. But interestingly, we've been trying to get a sense of just how much of that surge in use of digital channels is going to stick longer term. And we've seen from even surveys we ran last year that of the consumers that we surveyed around the Asia Pacific who said that they were using online channels more, there was still a good share between, say, 10 to 20, 25% even, that was saying that they would continue to use those online channels even post-COVID. And in the different sectors, for example, in takeout and food delivery, that had the highest ratio, but we also saw it in things like education, in toys, in sporting equipment, health and wellness. Also, we're seeing some pickup in the overall spend. And most interestingly, those categories of spend that were least being used in digital channels pre-COVID were, according to our studies, the ones that have seen the most sticky increase in the amount of digital use that they now have, even as we head towards going back in the direction of a post-COVID environment. And of course, there's still uncertainties around that, plenty other things we could talk through, but maybe in the interest of making this more of a discussion than a monologue, I will pause there and we can open for more of a discussion. Thank you.
Thank you, David. That was really fascinating. As I say, yes, I think you could have gone on for a lot longer and still kept us very informed. Like I guess there's several things coming out of that. If I look at your last point there, so something that is particular of, I think it would be a particular interest to a lot of the people who've tuned in, and that's around the payment side of things. So you mentioned, and this was part of the report, the recent Recovery Insights report. You mentioned that there's going to be some permanence in the payments behavior. So we're seeing a lot of COVID driving e-commerce. A lot of organizations adapted and built their e-commerce offering, and a lot of consumers were forced into it. Now, of course, we're now going to go back, we hope, fairly soon into in person. We're going to start going into stores again. What's your view on the permanency of this kick that COVID has given to e-commerce?
It's a very good way to think about it. That COVID supercharged existing trends. So it's not as if we weren't already seeing a major shift to digital going on anyway, and that was a multi-year process. All that we think has happened is that if you take, say, a moving average and we look back in 5 or 10 years' time, we will just see this point as an inflection point where the pace of change accelerated. Now, we know that as you open up, there will, of course, be people who do want to get back out to the bricks and mortar shops, back to restaurants. And you've seen that in the places that had an aggressive shutdown and then opened up to the degree where it's almost fully back to normal. Many of the ratios did also go back close enough to where they were pre-COVID in terms of say, eating in or eating out, for example. But we also have seen that overall trend is continuing. And I think that's the interesting part here, where more people that were never using digital before now have started using it. And as a result, knowing they can use it, they have that as an option going forward. And particularly in places where people would just find the convenience factor, some extra reason beyond I'm afraid to go out, as a reason to keep using, say, e-commerce for their purchases of either, say, food or simple things that they can just have a repeat purchase where they don't have to be there in person. Of course, plenty of people do like to personally go out for these things, and for eating in particular, it's hard to say that you're going to just stick with deliveries. But for the companies, and it's interesting you mentioned that angle too, the SMEs who are offering even more digital options, even more online options, did see a clear benefit versus those who didn't, from looking, for example, at a study we did in the United States. And we believe that sort of story would be true in most other locations as well, where that happened. So those who were able to go digital and offer that alternative have clearly been benefiting from that.
Yeah, it was interesting. Sort of here in Australia, of course, we're fairly down the road of e-commerce anyway, and I think that's what the report was saying. Those that were leading in digital e-commerce will see the biggest increase in the change. And I think, like all of us, we're all trying to understand, particularly as in the payment side, trying to understand what is that permanency going to be to the e-commerce, to the contactless payments, to cash. just trying to understand the impact. And I think in places like here in Australia, it could be quite a drastic impact. I think in a lot of the countries, again, and the report alluded to that, where where countries that weren't so far along that digital transformation, they may revert. The permanent change may be less. It was interesting. I saw in the report that the estimate that in the USA that the transition to digital payments in general has been maybe moved forward by 1 year through COVID. So it'll certainly be interesting to see how it all runs forward. I was also interested, and it's something I guess that we're all nervous about, understanding as economies stabilize, as we start to grow with so much stimulus from governments. Is inflation coming? Should we be worried about so much debt?
Well, I would argue on the debt front, it's something where, of course, we can pay attention to the fact that there have been major increases in overall indebtedness, in particular on the government debt side. That is absolutely true. But take Australia as a very good example. You saw the numbers earlier for just how aggressive the fiscal response was. The extra amount of level of debt clearly increased quite significantly. But the debt servicing actually went down because interest costs went down so much and the funding went down. So I would argue it's all about the sustainability of any debt level you have. And there's nowhere better to prove that as an example for multiple decades than Japan, where you have a debt to GDP ratio just for the government on a gross basis over 240% of GDP and no crisis. Now, of course, you do end up in a situation where if you were to see funding costs rise aggressively, and this comes back to your linking the question quite rightly to inflation, if you were to get an inflation shock that actually triggered expected inflation around the markets and the Main Street to actually go up dramatically to the degree that central banks have to backtrack on all of the forward guidance that is so aggressive right now in saying we do not intend to tighten policy anytime soon, in Australia's case for many years, that could be a challenge for sure, longer term. But the actual pressures for that to happen, knowing that we have still, I would not argue, tight labor markets anywhere. There may be short-term shortages in local areas, but for sustainably tight labor markets, where also the impact of AI and automation is allowing for even more wage growth, all of these combined, does it really mean you get an inflation shock? I would argue it's still really about more asset price inflation that's been taking off, and you've seen it just take the property market in Australia, but all around the world. Those aspects of inflation, even in, for example, this divergence and attention on things such as into the crypto world, these things will happen. But for broad consumer price inflation that central banks panic about, I'm not so sure that's going to be a problem.
Yeah, so I'm thinking, well, for me, I'll just have to stay in the property market and the ASX for a little bit longer before I look for interest rates to fund my retirement. I've got a question from my good friend Dissy in Africa. Do you have any information on the impact in Africa for any of this in your report there?
Well, the main thing, and I would say the key thing for anyone looking at how the shift to digital is working in Africa, one of the key places to look at is actually, for many years already, been Kenya. And we think that the example that we're seeing in Kenya is one that can be replicated across many other parts of the continent, and actually shifting towards particularly using mobile payments and to be able to get even more financial inclusion through a lot more use of digital channels is something that we think is realistic everywhere in the world, including in Africa. We're seeing it getting more and more connected. We're seeing and hearing of even more companies that are there trying to set up even more payments channels and rails. And we think that is clearly going to be something where Africa will not be left out from seeing the benefits of some of this technology that may actually reduce the need for adopting every other technology along the way. And there's an opportunity for leapfrogging here.
Yeah, absolutely. We've seen there's so much innovation that we've seen come out of Africa in the payment space. Simply because of that, they've used the mobile network and technology, and haven't been hindered by our old mainframes that we have in a lot of the Western countries, and all the spaghetti to be unraveled from that. I've got still 5 minutes left. How about like you mentioned pent-up demand there for travel. I think that's it's realistic. We all want to travel again. But now we're seeing the more vulnerable, the more older generation getting vaccinated everywhere. Do you think they'll be the first to drive the travel industry, the tourist industry? Overseas, that is, of course.
Yeah, no, it's a very interesting way of thinking it through. Actually, I have a chart on that that I think is worth sharing. Actually, where if we look at the older age groups around, in particular in the Asia Pacific region, we know that in the households with the biggest portion of total expenditure in aggregate for that age cohort, above 40 years old is where you see by far the lion's share of the spending in those households. Now, as you say, with more people getting vaccinated, the big issue for travel, international travel, is going to be: are we going to end up in a world where you don't have to wait for full herd immunity in both the recipient country and the origin country before a big pickup in international travel can happen? We would argue that, we need to wait and see, but at least in theory, if you have been vaccinated and you're going to a place that is on the way, or at least is a place where the area you will be in is vaccinated or close to it, that could be a way of being able to see more international travel. But the key concern short term is that so far the World Health Organization has not been recommending using a prior vaccination record as a condition of travel. So it is one where we need to wait and see on that front on exactly how it pans out. We know that certainly if you get the older age travelers back on the road again, yes, they are the ones that usually have got the more of the money to spend. And the key question also will be, not just as we see a recovery in who's allowed to travel, the demand side, which we think is very strong. Feedback is, and most people would love to be able to go, if they could, on more international trips. The key challenge is also going to be on the supply side. Will there be enough airplanes and enough supply to enable all of that to happen, particularly for long haul?
Yeah, and that is very much a worry for us here in Australia, as more and more airlines have stopped coming. Well, clearly for as there's no inward tourism, that there will be the routes to be able to travel, and it won't be so expensive. So look, we've got about 2 minutes left. I would be my friends on the who are listening in from the cash industry would be very remiss of me not to ask a question on cash. You can claim the Fifth Amendment, that's okay. But one thing we've seen during COVID is it's been a great time for banknote printers. There's more cash on issue right now than there has ever been. It's cash in circulation is huge. Now, we're not seeing that as velocity in the cash cycle in individual countries, but it's being used as a store of wealth, a flight to safety. What's your sort of? There's clearly a lot of trust in fiat currency and cash. Do you have any views? I mean, should the war on cash? Should we not have a war on cash? Should really what we're looking for is cash light, and understanding we need payments choice.
Well, there's no doubt people want payments choice, and there's the flexibility that comes with cash. I would argue that the amount of attention that you've seen this year from central banks, and it's the vast majority of them looking into the concept of a central bank digital currency, so a cryptocurrency that's actually genuinely is that currency of that country, rather than say being a coin like the ones that have nothing backing it whatsoever, and they can just fluctuate dramatically even from one day to the next, that could well be something where the interest in it, in being able to hold it, gets only bigger and bigger, because at least with that, you're not physically having to touch it. So concerns on the health side are not there at all. You can still have contactless cash in that way. That, I think, is something that everyone would welcome. It's all about finding the use cases for it, and also finding a way of avoiding it leading to any unintended negative consequences in terms of how it would impact the banking sectors and economies if it were introduced in a rapid way. Though I doubt that's going to happen anywhere. Instead, lots of studies will be done, and they'll make sure that whatever does get introduced is something that has been well thought through and is clearly planned out to not cause unwanted ripples around the economy.
Absolutely. Well, gosh, we're out of time. I think I could easily spend another half an hour, but unfortunately our time is up. And I know everyone, my cash friends, are shouting at the screen now. Cash is not a vector for passing on COVID-19. It's just it's
all about perception, but absolutely
it's keeping close to each other that passes it on, not cash. But David, look, thank you so much for your time. It's been really insightful, and I really appreciate you coming on and giving us your time. Again, I'm looking forward to the bubble opening up between Singapore and Melbourne, hopefully, at some time. And I look forward to catching up with you, and maybe we'll go down the Boomerang Bar at some stage. But good to talk to you, and thank you for your time.
Sounds good. Thank you very much.
Okay, well that was fantastic. So just in wrapping up, just a quick advert for our up and coming events. We are going hybrid in the end of the year. So we have our EMEA Cash Cycle Seminar, our America's Cash Cycle Seminar in Amsterdam and San Diego. They will be hybrid events. We have our Central Bank Payments Conference in Athens in November, again hybrid. And then our Banknote and Currency Conference in Washington, D.C. in February next year. So we're looking forward to either seeing you in person or seeing you in this bubble again. And finally, I do encourage you all to have a look at our Central Bank Payments news if you ever have the chance. Everything's on our website. So thank you all. I really look forward to meeting you all again in person, probably in 2022. But thank you very much, and goodbye.